Hey everybody, my name is Christopher Terry, CEO of iMarkets Live, and I want to record a quick video for you. Uh, we talk about entry techniques in our videos, and it's most important that we have the proper entry techniques. So I want to take a look at a structure here. Here's a pattern, an XABCD pattern. It completed down in this zone, all right? It completed, it's called a bat. I have my own name for it. It's called a deep bat because I didn't know what else to call it. X, A, B, C, D, right into this zone. And open it up. And so you know, when you have X, A, B, C, D, as long as the ratios align, meaning as long as the Fibonacci ratio is aligned, that's a qualified X, A, B, C, D. I'm going to be teaching this a little bit further in our journey across trading. But for now, we see that the market put a low here, another low here. It formed inside the PRZ, the potential reversal zone. That's what they call the potential reversal zone, the PRZ, and that was talked about by Scott Carney, the one of the gods, or probably the only god of Forex, of harmonic trading. Very very close friend of mine. So what we do is we're going to take our Fibonacci now and retrace it like this. All right. What you want to start looking to do now is working the buy side on the way down. So if you're scaling a little bit here, here, it doesn't matter. All right. So nothing wrong about in, scaling in, and scaling in. All right. Scaling in. Okay. Put a little taste on it. And then you start scaling into this zone and this zone right here. And you put a little bit on. All right. That's all you're looking to do. You're just looking to scale into the trade because you don't want it to come down here. Your risk would be below here, right there. All right. Right below the swing low. Wherever the market started having impulse, all right. Wherever the market started having impulse, that's where you start your low. That's where you start your swing. So what has happened now is you have this. All right. Market formed a 0 to 1, a 1 to 2, and now it's forming a 2 to 3 wave. All right? It's going to form it. So that's what I'm saying. You could be aggressive and start to buy into this push down. All right? As this market moves down, because you don't know if it's going to be shallow or not. Right now, it feels as though it's going to be shallow. Another trick you can do is take this swing low from here, right? That length. All right, I could take this length right here and emulate it right next to it. Okay, wait, hold on a second. Nope, not that one. All right, we can get rid of all this, right? We can get rid of that and still retrace this up. You see this right here? That length that I just drew is actually the same length from here to here and from here to here. Possibly it can come down here. All right, you're starting to buy this whole push down. Possibly it can come down here, but you don't want this coming below there, and your stop would be down here. So if this truly is a breakout, if it's truly a breakout, you want to start buying on the push down because your limitations are risk are right here. Number one, you're using this pullback as your buy, using that swing low as your risk, and you're looking for this thing to stop and turn up. If that's a real drive to the upside, then you're buying that retracement down. We take this down to maybe maybe a 15-minute chart, and you watch the momentum, and that's why I put my oscillator, the indicator. If you watch my videos, all right, you have made momentum high on the 15-minute chart. It's now correcting back down, and that's normal. All right, that's normal. Right, so you want to basically, after impulse to the upside, you want to start buying the pullback down and see where the market turns back up. Now, a little disclaimer there: we're in the Christmas week. Things are a little bit slower, and this is a sharp move, maybe out of news or something. But the fact is, it was a sharp move, and you are getting a pullback. But this is how you seek to enter into trades using the harmonic scanner. You wait for those things to move, and you pull back, and you look for zones to enter. Yeah, and you got yourself 53 pips at this point. Big deal. I'd risk 53 points every day if I could turn around and make, 100, 200 pips. So just keep that in mind. That is right there. That's one of the entry techniques that I like to use is getting a retracement down and you piece them in. You scale into it. All right. As you scale into it, you get yourself a better position because we're not expecting it to go all the way back down. All right. So I hope this helped you. I know it's a quick little 5-minute video, but that's the thinking behind some of the entry techniques that you want to use when you're using it for the harmonic scanner. Now I may screw this whole chart up again here like that. All right, but you got the point. All right, there you go. All right, my name is Christopher Terry, and thank you very much.